to help us make sense of what's happening in the markets. Mark Dukas, he's a crypto analyst at Bitcoin.Live and the founder of BitcoinSmartMoney.com. Welcome to the show. I know you're not an expert in inflation, but I guess we all feel it. Any expectations what's going to happen tomorrow?
Sure. So the key for tomorrow's metric reading is going to be to see if we are above or below last reading. And if we come in a little bit lower, we can potentially say that inflation's peaked. And, with the dollar trading at 20-year highs, we had a 7-year accumulation of that dollar breaking out recently. So it's going to be really important to see how tomorrow unfolds and then where we can move on and see how the markets will react to that data.
One thing that I noticed with these inflation numbers is, first of all, they're backward looking, right? So part of what's happening in Russia and Ukraine and supply chain issues, we're not going to see a lot of that inflationary pressure for likely months and months and months, right?
I've already started to see some of that inflation pressure in the United States with some of the household goods and also other services. We've got rates and prices increasing across the board. So I think it's going to precipitate to be coming down the pipe even further in the next few quarters, and we're going to start to feel and see that even more. Once you start paying that month over month, it starts to add up and build. The first few months, it's maintainable and sustainable, but once that builds and that pressure unfolds, we could see that pain start to hit people's wallets even more, especially with the pain at the pump we've experienced.
So here's something I've been thinking about. Bitcoin, when it became the hot thing several years ago to where it is today, the idea is you'd park your money there, it'd be great because it would be kind of an anti-inflationary issue. But now that inflation is kind of back up again, you see rates coming back up, you could technically put your money in the bank, you earn interest on it, and the money is worth a little bit more tomorrow. What does that relationship look like now between inflation and cryptocurrency?
So in the long term, Bitcoin, Ethereum, and other macro cap coins that are here to stay, those are going to be beneficial with the inflation that we see with the dollar and the Federal Reserve continuing to print. Yes, we've had some tightening and rates are now increasing, and we've got a handful of other rates that'll come down the wire here in the next quarter. But what you've got to say is you've got to not look at making long-term decisions based on short-term data. And what Bitcoin solves in the long term is that monetary issuance of having an asset increase in value over time because it's deflationary.
But here's the thing.
Early on.
If all other assets are inflating, right? Let's say my house goes up by 10% and everything I own goes up by 10%, but Bitcoin remains, say, flat. Doesn't Bitcoin have to increase by more than what everything else is being increased by to make it sort of worth the time and money for everybody to invest in Bitcoin as an investment?
That makes sense over the short run if you're looking at, say, a few months. But when you zoom out and look at Bitcoin on a 4-year track record where every 4 years this monetary supply issuance gets decreased, it's an outperformance asset. And if you hold $100 in the bank this year, it's worth less than $95 next year. So holding too much cash isn't smart, even though the dollar is increasing. Yes, over the short run, it's very important to have enough cash for your lifestyle and making sure you take care of your requirements as a daily person. But at the same time, you've got to be forward thinking, like we discuss and talk about, in putting your money to work for you while you're doing your own work.
So in the last couple of months, we've seen the markets basically deflate on itself, right, for a variety of reasons. And Bitcoin and other cryptocurrencies have also come off, and they've all hit recent lows as well. So it seems to me that they're sort of tracking each other a little bit. What's next for cryptocurrencies?
So Bitcoin's definitely been trading in lockstep with the NASDAQ and tech, and it's definitely higher volatility. But this is the first time in 40 plus years we've had bonds go down and the market go down. Generally, they're inversely related. So this is a new paradigm that we're experiencing, especially with an increasing dollar over the long term. So you've got to just say, what am I doing? Am I making decisions based on a fearful thought process or a greedy thought process? And generally, when you do the opposite of those crazy emotions that you fear and have with the monkey mind, you'll do well. It's just overreacting in the short term can be something that you've got to understand the psychology of how markets work. And it's something that takes many years to understand. So just don't make rash decisions based on a couple weeks, a couple months of pain. Recessions, we haven't had one in over a decade. And it's only it's okay to have this type of pullback and push down for a reset. We need something like that.